be very, very cautious of an IUL if you are intending to do the infinite banking concept. An IUL, or an index universal life insurance policy. A lot of people go out and they sell these as you're tied to maybe the S&P 500. You're tied to some sort of an index, and they tout these policies as your policy can only go up, and when according to the index, usually there's a cap on it, so it's not going to go as high as the index. But the main thing with these is that it's on down years when, say, the S&P, if that's what it follows, if the S&P 500 goes down that year, then you lose zero. You stop at zero. You can only make money is the way these are sold. Now that sounds really, really good. And usually it almost sounds too good to be true. And well, it might be. So look into it a little bit and go ahead and find your favorite Google, whatever your favorite search engine, and just search for universal life lawsuits and go down that rabbit hole. See how many lawsuits there actually are, because when these things are sold, usually when someone's young and insurance at that point is affordable, but in index universal life policy, there's a portion of it that has a term insurance rider. It's renewable, so you're guaranteed that you can get it every year. But imagine what happens if you make it to 70, 80, 90 years old. If you're 90 years old and you have to pay for a term life insurance, a 1-year term life insurance, how much do you think that's going to cost? So that in and of itself is going to eat up most of your gain, in my opinion, is going to eat up most of your gains. I'm sure there's some of these that have worked in the past, but I talking with other people that they are great for the insurance agent because they make a shitload of commission from it. So if they're making a lot of commission, they're doing good. They're selling a lot of this stuff. The insurance company is doing good because they know that at some point this is going to be so expensive, it's going to be unaffordable, that the people that are insured are eventually going to let it lapse, which means the insurance company keeps all of that money that you paid in over all those years. So it's a win for the agent and for the company, but for the person itself, themselves, you and me, I just don't see it as being that good of a program or a product. So just really look into that, and the agent's going to tell you anything because they've got a huge commission on the line. But just go through there and Google it and see how many actual lawsuits there are. They're everywhere. It's crazy. They promise, they make a lot of high promises, and by law they can only project a certain rate, but they will show you that rate and they will project that out for the rest of your life. I've talked to a couple people that they say it never happens the way that it's projected. Now, if you go back to the original infinite banking concept, which is a whole life insurance, that's it. It's not tied to any. It's not a variable. It's not an index universal. It's just whole life insurance from a mutually owned company, which means they can pay dividends to the stockholders, which is the policy holders, and they're not beholden to Wall Street, so they don't pay dividends out to their investors. The companies that I trust have been around for 150 to 200 years, so they have paid out dividends every year through their entire existence, basically. Over I think I'm with Mass Mutual and Penn Mutual, they paid over 150 years. I think Mass Mutual is like 177 years or something like that. So these companies have been around almost since like the Civil War, and they've paid dividends every year since then. So that is, maybe it's a little bit more conservative, but it's guaranteed. And if you look at the actual growth, it's tax free. You don't have to pay taxes on it. And one thing too, that if you have money into a IRA of some sort, it's depending on how it is, if it's either a Roth or a traditional, you have required minimum distributions you have to start taking at some point. So at some point you have to take more and more out, which if you have to take a lot of money out of your retirement at the end of your lifetime, it's going to push your tax bracket way up to the next level. If you pass away, your heirs, now they don't get this tax free. They can, I think, take like 10, don't quote me on this, I think they can take like the next 10 years to draw that down. But that money then that you save into your 401k, yes, your heirs will get it, but they have to take required minimum distributions from it as well, which means it's taxable event. Where if you go to the IDC, the infinite banking concept, through a whole life insurance company from a mutual carrier, that money is all passed tax free. You don't have to take, you get at the end of a life, your heirs will get one big distribution. And another way to do it is to not give it directly to your heirs, but to set up a family trust where then upon whoever's insured death benefit then goes to the trust. The trust can then buy insurance for the next person down the line, and your family, your heritage, everyone that you want to leave money to will actually have another life insurance policy, and that will continue. They can always use it. They can borrow against it for whatever they want, however you set up your trust, and they will have access to money. But if they do it right, they should pay it back. And at the end of their life, then it goes back into the trust. And this whole waterfall method just keeps on going and going for, it could go for generations, depending on how you set it up. So just wanted to bring that up. If you're looking at IUL, or even if you have an IUL, you can, there are ways that you can convert them. I wouldn't talk to the agent that sold you the IUL. Maybe you want to, but I would talk with someone who really understands the infinite banking concept. I can hook you up with people. Shoot me a text there if you've got questions on that, and I will put you in touch with the people who got me set up with my policy. I trust them. They know what they're doing. They are certified through the Nelson Nash Institute, and really top-notch people, and they are looking out for your best interest, not for their best interest. Their commissions are cut way down. So, but in my mind, they do business with integrity and they do it right. So I hope this helps. And yeah, if you are looking at IUL, yeah, the projections can look great, but really think about it. If it's too good to be true, it just might be. Good luck.